We can craft this lease how we see. And, maybe you got a deal you really love. The basis is great. The credit of the tenant's fantastic. It's just a little thin. You might say, okay, we're going to, let's have 5% bumps for the first 5 years. Let's kind of build out of that, right? It's almost like a more aggressive value add almost baked into this lease, right? Again, 5% NOI growth. I mean, any real estate investor is going to love that. But you might, push for that if you go, look, this deal just, this cap, unless we can get a higher cap rate, it doesn't work. And maybe they need certain proceeds or have certain requirements around their rents. You can start to negotiate with the tenant in that way and say, hey, can we bump it up a little faster, at least for the first 5 years? But, these guys like the long-term leases. They're okay with the annual rent bumps because usually they're pretty conservative. And frankly, they want to be there for the long term. Otherwise, they wouldn't be signing this long lease. And they're giving themselves a lot of protection, right? These guys are paving the way for some predictable overheads so they can continue to grow their business. But one last thing on the leases is we require them to report financials to us in the lease. And that's a very institutional lease reality. But it's not only for that, it's for us to mitigate that risk as well, to monitor them. And if you're seeing some negative trends, compressing margin, declining revenues, obviously you're going to want to talk to that tenant and say, what's happening? Can we work with you? Can we help you? Let's look a little closer. And if it looks really helpless, like they're going down in flames, a slow, agonizing death, you might want to start, thinking ahead, right, about what we can do, or maybe even help them, right? There's a lot of things you can do, but you hate to just kind of wring every last dollar out of them until everyone's out of a job, right?